Looking at your investing portfolios this week might not be as much fun as it was in the past few months, as we're experiencing some of the biggest drops in stock prices we've seen for a very long time. As of the time of making this video, the S&P 500 is set to open 3% down, and the tech-heavy Nasdaq index is based for a drop of more than 4%. Even closer to home in the UK, the FTSE 100 index is more than 2% lower, and other markets are having a very tough time. Not only that, but some of the biggest names in the world are losing tens of billions of dollars worth in value, and if you're anything like me, your stock market investing apps are buzzing with notifications constantly telling you that everything is going down. Anyway, I wanted to make a video going through all of the different reasons why this is happening right now, and then give my own opinion on whether or not we should actually be doing anything about it. First up, you may have seen that last week US jobs data came out showing that only 114,000 new jobs were created in the US. This was massively short of the 180,000 that was expected, and was also down from the number that was created in June. And the rate of unemployment increased to 4.3%, which is the highest level since October 2021, and it was also up from the previous month. Now, although this is still low based on historical numbers, investors are very worried that this could be the start of worse things to come, as high interest rates finally hit US consumers, hit them hard, and stop them spending money in the economy. On Friday, the stock market saw a major sell-off, with most of the conversation citing this data as the reason for it happening. The logic says that if more people are out of work, they spend less money, and therefore this would affect the future earnings of companies. The future earnings of companies are traded on the stock market, therefore a lower expected future must lead to lower prices, or at least that's what's being said. Remember, the Federal Reserve in the US, headed up by Jerome Powell, have two jobs to do. One is keep unemployment low, and two, keep inflation under control. And with unemployment rising, this gives them a big signal that they might need to pull their biggest lever and start cutting those interest rates. As rates get lower, it's cheaper for companies to borrow money and cheaper for consumers as well. So in theory, this should unlock more cash for everyone to go out and buy more stuff and then go into the economy. And then the cycle continues. Investors are now expecting several rate cuts this year from the Fed, which would bring rates down to around 4.25 to 4.5% range by the end of the year. Keep an eye out for that. I'll definitely be covering any major news like that in the future updates. So make sure you are subscribed if you aren't already, and get your ticket that says you were here before 100K. We're so close now. Thank you for the amazing support along the way. Now, just before we move on to the next big story, check out what's been happening in the Japanese stock market. Virtually all of the gains this year have been wiped out, and they've had their worst day since 1987. Not a good time to be an investor over there. It wasn't long ago that we were all talking about just how amazing the gains have been in the Japanese stock market, and we're all missing out. Amazing how quickly things can change, and maybe they flip again as soon as I finish making this video. Just always my luck. Okay, the next big story that's been grabbing the headlines comes from the big man himself. Warren Buffett revealed that Berkshire Hathaway has unloaded nearly half of his stake in Apple, leaving him with an incredible cash pile, which is higher than it's ever been before. On the surface, you can easily see why people think that a recession must be ahead and much worse is to come, as Buffett is famously someone who's pretty cautious and likes to keep cash ready to grab those bargains. So therefore, I can easily see why people will now jump to the conclusion that a recession is ahead and they should just copy Warren Buffett. Let me just say a couple of things here though. Firstly, nobody knows what's going to happen next in the stock market. He's said himself multiple times that he has no idea. And if anyone claims that they do, they're lying to you. Just a couple of weeks ago, we were all saying how amazing everything is and stocks are set to go higher and higher. The only person who can tell you why they sold a stock would be Warren Buffett himself. As you may know, Apple was a huge part of their portfolio, and if anything, way too big of a part, even for someone who likes to make concentrated bets. Also, these sales weren't just now over the last week, they took place over the past 3 months. If you have a look at the price of Apple stock during that time, it's actually gone up more than 30% from May to the middle of July. Now, if anything, Buffett's missed out on a huge amount of gain, so it's really not quite as simple as saying if he's selling, bad things must be ahead. I really don't think anyone should be copying the moves of another investor, even Warren Buffett. As he has said time and time again himself, most people should just be buying an index fund and not looking at another stock again. Still though, there's no doubt that this will have an impact on Apple stock. As you can see as I'm recording this video, the stock is down almost 10% in the pre-market alongside many of the other big names in the market. There's no hiding today, folks. We're all in this one together. Okay, next up, not as big of a factor, I don't think, but there has been a lot of concern that all of this huge spending on AI by the big tech companies is not actually going to make any money, at least in the short term. At the moment, you have all of the big players like Microsoft, Meta, Google, Tesla, and others spending tens of billions of dollars on AI chips from Nvidia. This chart is just incredible. Take a look at this. Here's the percentage of capital spending from the big players compared to what percentage it's making up of Nvidia's revenue. As you can see, more than 40% of Nvidia's entire revenue is being made from just a handful of these big companies, with Microsoft, as you can see here, being the biggest spender. Microsoft is spending almost half of all of its capital expenditure on Nvidia chips, which is just a huge amount of money. Now, the big question is, what are these companies getting for their money, and are they actually generating more profits by making these investments? Now, there's a lot of debate around this part as the AI arms race continues. All of the big tech names are claiming that their AI will help them and make their customers make more money. But the issue is when that money will come. You also have major supply issues right now, as Nvidia is the only company making chips that are worth buying, and they can literally charge whatever they want and get the order. Can you imagine being a salesperson at Nvidia right now? It would be the easiest commission you've ever made. Imagine if you were the account manager for Microsoft. That would just be the definition of an order taker. Now, I've got no doubt that AI is still in its early stages, and at some point there will be huge value to be had by integrating it into our daily lives more and more. The question is just a matter of how long that takes. I think a similar example would be to look at the dot-com bubble. The internet was the future, but at the time it was just a little too immature and people got way too excited with it too early on. Also, just like in the dot-com era, we have no idea what areas of AI will succeed and what companies using it will do well in the future. This is always such an interesting thing that I like to remind myself of. Even though the internet was the future, only a handful of internet companies managed to make it out alive during that boom period just over 20 years ago. I think the next 20 years are going to be just as crazy, but as always, love to hear your thoughts in the comments below. Now, with that out of the way, what are we meant to do as investors when everything around us looks like it's crashing? Well, first thing worth saying is that I can almost bet that by the time this video goes live, something else has already happened, or maybe some of the stocks I've mentioned have recovered or got even worse. And I think this leads me on to a major point I wanted to say. Isn't it amazing just how quickly the sentiment can change in the stock market? Just a few weeks ago, everything was rosy, stocks were up every day, the economy was rock solid, the US consumer was strong, and people were calling for the S&P 500 to rise another 10%. Now, we're in a position where a recession is being called for, stocks can only go lower, and apparently the worst is yet to come. Just stand back for a second and appreciate how quickly that has turned, and then take another second to realize this can all change again very quickly. Now, I'm not for 1 second claiming that this market will just jump back up over a certain time frame, but I am definitely not going to try and predict or time the market. If you want those kind of predictions, don't worry, there is plenty of channels on YouTube presented by grifters who are loving the market right now. They know that when you're afraid, you'll watch more of their videos, they'll make more money and sell you whatever they have on offer this week. It's funny to think that when the market has a bad day, financial news channels and here on YouTube, there will be even more views compared to when the market has a great day. Don't forget just how important psychology is in all of this. The second part I wanted to make was this. Everything you are seeing today is normal. Now that might sound crazy, but hear me out for a second. Since 1928 to present day, the S&P 500 has had a drawdown of 5% or more in 94% of the years. So you can almost expect to see negative days in the market, and if anything, you should be worried if you don't see them. Also, listen to this part. The average intra-year drawdown from 1928 to 2023 was negative 16.4%. Since 1950, the average correction in a given year was minus 13.7%. During a year, even if it ends positive, anything can happen, and volatility is just part of being an investor in the stock market. I really like this quote that says, volatility is the price of admission when you're investing in stocks. If you want to be an investor, you have to be able to put up with the ups and the downs as hard as they are to go through, or you can almost guarantee that you'll end up losing money. The red you see in your investing accounts today is only a loss if you sell. For me, it means nothing, and I won't be changing a single thing about the way I invest. If you're a short-term trader and you pick stocks, go ahead and do whatever you like. But for me, as a long-term investor who mainly sticks to low-cost index funds, I'm still going to be investing month after month in exactly the same way. My investments this month have already been made, and in another few weeks, my next month's deposits will go in. If you let today's news or this week's market moves affect your behavior, then I honestly have no idea how you'll be able to do this for another 10, 20, or 30 years. This is just part of what you have to do. Now, obviously, I'm not your financial advisor and this is just my own view, but if you are worried, can I suggest that you have a read in the comments below from those people who've been doing it way longer than I have. I can imagine that the real long-term investors are happy for a sell and, if anything, have tuned their brains to see a red day as a good day for them. If it helps, I also like to zoom out as well. Try and at least think long-term and remember that these dips today, although they seem important, will only ever be a distant memory in the future. It's only once you zoom out that you truly appreciate the perspective. And I know it's easier said than done, but the rewards of investing can only be given if you get through the tough times and, as well, getting through the good ones too. Let me just say one more final thing on this story. Could this be the start of a market crash? Sure, absolutely. I have no idea. Neither does anyone else, as much as they claim to know what's next. Anytime things like this happen reminds me of a great quote from Daniel Kahneman. He said, "The idea that the future is unpredictable is undermined every day by the ease with which the past is explained." Now, I realise that I've tried to simplify what's going on now by explaining why it may have happened, but that does not mean that you can predict the future of the stock market, let alone the economy. Anyway, if you want to be a better investor, why not check out some of the worst investing advice that you'd need to avoid? I'll see you in the next video. Happy investing.